You have grown primarily through acquisitions. So, how do you identify these opportunities?
So in terms of identification of opportunities, we have a sort of playbook that we go for. And there are certain characteristics that we look for in companies. For example, the quality of the management team, what is the cash conversion in the company from EBITDA to free cash, what is the growth pattern of the company, does it grow at a minimum of 20% per year or not, what is a purchase cost consideration, and if the payback is, let's say, within 3 to 4 years or not. And finally, one sort of soft test that I put in the whole process is if this is a promoter I can take home for dinner or not, to get a sense of how our relationship will build with them. But before we even get into a transaction, one of the things that I think we've been reasonably good at over the last 8 years when we've done 20 odd transactions is to identify an asset that we want in a certain specific area and then we go after it. So we've never used a banker in our transaction. We've always done deals ourselves. So it's usually a relationship that I build with a promoter and then that converts to a transaction. So that's really how we've done all of these transactions.
Tell us, how do you go about the integration?
After we invest into a company, we usually look at two or three things initially. We have a 100-day plan for a company. So in a 100-day plan, we look at issues like organization structure, key positions, are they staffed or not, integration with our company in terms of, we use SAP for accounting. So can we have SAP implemented in the target company too? We have our own HR and administration system that we can also implement in the target company. And finally, we also look at cultural issues. So culture for us, we look at three underpinnings: employee engagement, customer centricity, and speed and agility of action. And if any of the three needs to get acted on, then we put our teams to work on it. So the combination of this 100-day plan, these three underpinnings that I talked to you about, and why we do a deal and how we do it, I think is what's helped us to make a success out of some of the stuff that we've done.
What has been the impact of the macroeconomic slowdown on your business?
Results have been a bit dichotomous in terms of what the economy is going through and what our company is experiencing. For example, in the first 6 months this year, we have grown to the extent of about 59,000 jobs, to 59,000 headcount that we've added to our workforce. The whole of the last 12 months of the last financial year, ending March 2019, we added 56,000 jobs. So it shows that this year in 6 months, we've done as much as we've done in the 12 months of the last year. And this is in a time when GDP growth rate has been steadily falling. So I think it points to two things. One is that we've been getting market share from clients, from our competition. There's a movement of jobs to the informal, from the informal to the formal sector, as a result of which we are capturing more of the flow into our company. And lastly, the need for compliances and the need to be more visible in terms of how you're compliant forces companies to employ through companies like us, which are definitely more compliant. So we've been capturing that part of the opportunity.
Were there any tweaks that you had to do in order to mitigate the impact of the slowdown?
So, usually in a slowdown, there are 2 or 3 things that you need to do. One is that you need to make the company more productive. The productivity index of the company's got to rise by the metrics that you work on and by improving on how people work and the quality of their outputs. The second thing that you got to do is on the balance sheet. How much debt you've got and how you can reduce debt, therefore your interest cost comes down. And if there's substantial leverage, it's always good to get rid of that. The third thing is to also see in terms of capital allocation, how much you want to keep and how much you don't want to keep. So we've been working on all three, and I think the results of it are beginning to show. And this year, the last quarter, for example, the Q2 has been a big one for us.
Do you think the government has been doing enough to help companies tide over the slowdown?
I think the government's intentions are good, that they want to help, that they've tried. They've reduced income tax. They are possibly going to look at dividend retention tax in terms of the rates at which it's done. They have attempted to make business, the ease of doing business, as a matter of measurement, it's becoming easier for companies, etc. But I think they've got to do more than this. It's not enough to just reduce income tax rates for corporates, or just force RBI to reduce lending rates. I think the key is going to come down to government spending, quality of government spending, and how that reinforces the ability to transfer money more to consumers who will spend it to then give a lift to the economy. The one thing that I love the government to do is to increase minimum wages. And if you put more money in the hands of employees and raise their average quality of living, I think it will satisfy two things. One is raise quality of life of citizens, and at the same time give them spending power, which will further enhance business for the economy.
Keeping in mind the current economic condition, what is Quess Corp's strategy going to be?
So I think we are clearly in a consolidation phase right now. We want to ensure that all the investments that we've done work, our cash flows are going to plan, and we will build a company which is debt-free, and we want to make it more predictable in terms of results. This year, we will do almost 11,000 crores of turnover, up from about 8,000 odd crores last year. So it's almost 30% of growth in an economy that's growing only by about 5-6%, whichever number you take. So we are seeing a company that is a sort of an all-weather company, because people tend to variabilize their expenses on the SG&A side when the going gets tough. And Quess Corp is a company that's able to absorb these services from companies who want to outsource them. So I think we've done the heavy lifting. We are on the right at the right time, and I think we've hit the right tone in terms of operations and margins for the moment.